What are you seeing here, and what does it signal for the Fed?
Well, the headline number does come down, especially from the revised figure, and we knew we would have some revisions this month because of the turn of the year. But it is still very, very elevated, and the number of people getting hired didn't change all that much, 6.4 million. So at this point, it looks like we are still seeing a tight labor market. That's the lesson you take away from this. The number of quits decreased a little bit by 207,000. The quits rate, though, unchanged at 2.5%. So people still feel confident about getting another job. The number of layoffs did increase by 241,000. So we're starting to see that. We haven't seen it in the jobless claims yet. We'll see if that starts to translate through. Remember, this is January data. This isn't even February data. So if we haven't seen it in claims already, one doesn't know exactly what's going on. But again, the takeaway from this is basically we haven't seen a significant change that would adjust the Fed's view that it's a tight labor market.
Okay, given that, are we now in a position where we need to see weak data in order not to get 50 from the Fed at the March meeting?
You know, that's an interesting question because a lot of people came out yesterday and said, well, we would need a real collapse for the Fed to go back to 25. I don't think that Powell was as firm on 50 as some people think in the markets. I think he left a big opening there. What we saw in January was a big increase in a lot of data turning hot that had been going down for 3 or 4 months. We also know there were a lot of revisions to the numbers. So is it going to revert back? The Fed doesn't have to make a decision until March 22nd, so they can wait for the payroll report and the CPI report. And so I think it's a little early to say that the Fed is locked in at 50 and it would be hard for them to walk back. I think at this point they are truly undecided since they don't have to be.